Alrighty, welcome back to another trade recap. Today I ended up taking 3 trades. I ended up taking 3 short stabs towards all this generated sell side liquidity. However, I ended up having 1 break even and then 2 losses. I'm down around like 2,900 on the day, so it was a big loss day for me. I had good risk management. However, just ended up taking 3 trades, and that's the result you're going to get from taking 2 losses like that. So I want to run through kind of my bias. Let me go back and do replay mode. So coming into market open, if we look at the 15-minute, in the pre-market, we had this huge, what is this? 230 point sell-off, right, towards sell side. Now, ES ended up taking this low and putting in a bullish SMT. However, from the bearish order flow that we have been putting in, I would expect this to flush through and this to be turtle soup on the higher time frame to then go higher towards all these relative equal highs. Now, when market opened, this 15-minute fair value gap opened up, as well as, if we go to the 5-minute, this untapped 5-minute fair value gap. So I wanted to see price rebalance towards this to then move lower. And then this also lines up with EQ OTE of the price leg. So scaling into the lower time frame, coming into market open, what did I want to see? I wanted to see this high get taken, tap into the 15-minute to then move lower towards all the generated sell side liquidity. So market opens, we take that high exactly how I wanted to see, right? We continue to push higher, right? I want to see us get below these down close candles. We get below these down close candles, right? So now this becomes the 1-minute change. I enter short, and I'm targeting this generated sell side with my break even at this internal low, right? Now, break even ends up getting hit. Move my stop to break, and I get stopped out at break even on the very next candle. Now, this trade, the change was not super clear. Looking back at this trade, journaling this trade back again, not a trade that I would really take. I would take this probably 5 out of 10 times, 50% of the time. Not a great trade. However, the model was there. And the reason I moved my stop to break even is because I wanted to mitigate risk. And now that I got stopped at break even, right, we're mitigating risk on a trade that really should have never been taken. So clear up the charts. And I end up looking at this, right? So we take this internal low. Now, if we're bearish, I want to see this flush through, but if we're bullish, we're going to go up towards these highs, right? We end up continuing to build price action, putting in a bearish SMT. So if we take a look over at ES, if we take a look over at ES at this point in time, at 737, we end up taking this high, as you can see. So on ES, we end up taking this high, putting in a bearish SMT internally. So from this, I want to see a move lower, right? I mark out the 1-minute change, and I'm waiting for a close below the 1-minute change. We end up dancing around, and I want to point out, when we start dancing around this change like this, a very clear sign not to take the trade. That price action is inefficient, and we have low volatility, not great market conditions. We need to stay out of this. Now, right here, I end up taking this trade when we close about below the change, just targeting a 1-to-1. Again, a trade really should have never been taken. And I am not happy with this trade, even though the model was there. So the model is here, right? We have an SMT, we have a change in the state, right? But when we're dilly-dallying around this change in the state, clear sign we should not be taking this. But I ended up taking it, and on the very next candle, I got stopped out, right? So not happy with this second trade. Again, a trade that really should have never been taken, even though the model was there, right? The model was there, but just if we just look at this price action right now, very inefficient. So if we clear up all this, right, we have generated this buy side liquidity. We also have this sell side liquidity that is still being generated. If we take a look at the 30-minute, we end up opening at 8 a.m. or at 10 a.m. Eastern time, this 30-minute bearish fair value gap, right? This unfilled 30-minute bearish fair value gap. So I want to see price tap into this and then have a bearish reaction to go take all this generated sell side. We end up moving higher, taking that high, right? I mark out this 1 minute fair value gap. And I want to see this get ran through for me to take a short. We end up respecting this 1 minute fair value gap and getting below this 1 minute bullish fair value gap, creating an inversion. I enter short one last time, stop at the high, and I'm targeting all this generated sell side liquidity. And then we begin to chop again, and I end up getting stopped out, right? So those were my 3 trades that I ended up taking again today. Again, 2 losses, 1 break even. And again, if we just look at this price action, this is price action we do not want to be trading, right? We're not taking anything. We're not having any manipulation leg. We're just moving up, generating more sell side, moving up again, generating more sell side, moving up again. Very, very inefficient price action in a day where you should really be staying out of. After my first trade, I should have not taken any more trades today. But that's just a lesson that you have to learn and that you got to move on from. Again, like I said, I'm down around like $2,900 on the day. Those were the 3 trades that I ended up taking today. I hope you guys enjoyed this trade recap, and I will catch you in the next one.